Hi, everybody. My name is Matt Brown, and welcome to the Direct Private Investment Show. In this video, we're going to be talking about investor considerations. With me on the line is Garrick Ruiz, and with me in studio is none other than Nash Roberts. Garrick, I'd love to start with you. Could you fill our viewers in from around the world on a little bit about your role, and then Nash, if you could be so kind as to do the same.
Sure, absolutely, yeah. So my name's Garrick Ruiz. I spearhead the private investor, accredited investor, retail investment channel here in terms of sales and syndication. What that role entails is speaking to investors based on any particular offering that Carofin currently has recently launched or is live in the market with, any past deals or investors that investors may have questions about, and of course any upcoming in investments that may be on the horizon. And so part of what I do here is walk them through the nuances and the ins and outs of each of those investments at any particular level that prospective investor would like to hear about, so that I can equip them with the most current, accurate information possible for them to make the final investment decision whether they'd like to proceed with an investment with us.
Fantastic. Nash, what do you do at Carofin?
Similar to Garrick, I'm a VP of Sales and Syndication. I've been with the firm for almost 11 years now. Most of my focus is on marketing to figure out, to broaden our network of individual accredited investors that are looking to allocate capital to direct private investments. I also spearhead our strategy in building out a network of family offices that care about direct investing as a theme. And really, where I spend a lot of my time is trying to make sure that we're collecting investment preferences for a given individual or a family office, so that as we have an offering that matches certain criteria, we've got that catalog so we can efficiently present deal flow that is relevant to a given investor and their various investment themes.
Fantastic. Thank you, gentlemen. So Nash, I'm going to stick with you for a moment. Not a day goes by these days where there isn't a hot new deal coming past my eyes or past my eyeballs. I'm curious for you to unpack what should investors consider a hot new deal, and what factors go into understanding these types of investments.
Sure. Well, so as a broker dealer, fundamentally we think a lot about investor suitability, and it's great. We talk about returns a lot, but what we really should start is, what are your personal investment considerations, and how do you think about risk as an individual investor? So given that we deal with direct private investments as opposed to a fund investment, where most accredited investors have experience within private capital markets, we're taking a given issuer that might be a subset of a fund and providing access to investors allocating capital directly into a given investment structure. So that could be on the cap table if they're investing equity with an issuer, or they could be participating in a loan to a given issuer. And so where we like to start is, have you ever made a direct investment in a private company? And if so, how did that go? What's your tolerance for risk? Have you ever written down an investment that didn't pan out, and how did that feel for you, personally? And so that's kind of a starting place in terms of thinking about investor suitability. If this is your first time making a direct investment, what size do you want to make in this given investment, and maybe cut that in half? Because really, we want to, through Carofin, we're providing an access point for investors to easily make direct investments, but we recognize that for a lot of people coming onto the platform and interfacing with us as an investor, this might be their first time making a direct private investment. And so invest less than you want to as a starting place, even if it's a hot new deal, because as we all know, there's a lot of hype in the private capital markets, and we want to make sure that you're comfortable making an investment and you understand the risks that are inherent to direct private investing.
So it's really important to understand the opportunities, the upsides, and then also the risks as well.
100%.
So Garrick, when you speak to investors who are considering direct private placements, what size of investment are they typically looking to make with Carofin?
Sure, absolutely. Very good question. And I'll lead off by saying, I guess by providing the proverbial answer of it depends, right? Those typical percentages that an investor's looking to deploy are based around a few sort of underlying factors, right? One of which are the investor's needs, obviously, and that would be needs for growth or income, right? In terms of a bias of any particular bias they have for any type of asset class. Another one is their overall risk tolerance or risk appetite, for how much risk they would be willing to take on in exchange for a potential return. Another would be investment experience. I think that's very pertinent here, and that would be just overall investment experience, both in the public and private markets. How long have you been investing for, and what does that look like? And then, of course, finally, it's trying to factor in and take a look at their existing portfolio allocations of how they are currently deployed right now. But traditionally, though, if we look at this, just based on the traditional asset classes of stocks, bonds, cash equivalents, and then alternative investments being the fourth bucket, investors will typically look to deploy into private placements, be that debt or equity, somewhere in the vicinity of a 10 to 20% of their overall portfolio.
And Garrick, sticking with you for a moment, have you ever had to caution an investor that's potentially making a first-time investment in a direct private placement opportunity, and they're a bit too, let's just say, bullish on the opportunity? Have you ever had to say, hey guys, just slow down a bit, pull your horses in, and give them a bit of a caution? Could you give us an example of potentially doing one of those things? Absolutely, I do.
So I do that across the board for all of our investors here to make sure that they're aware of the types of investments that they're looking to get into, and how that particular allocation that they're looking to make could complement their overall portfolio, but also to consider and overlay the factor that it might disrupt their overall current exposure into any particular given sector or vertical, right? And so I think the best way to put this into, I guess, to create the vision would be to use the real life example, right? I had recently had a conversation with an individual who was looking to deploy about $1 million into private placements. And they are trying to create a sort of tailored basket of handpicked investments that are suited for their needs. And so, very, very quickly throughout that time, right, as you mentioned about deals launching, we had one particular deal launched that this investor liked very much. They were very excited about. And of that $1 million, they were considering allocating as much as $500,000 of that, right? And so I had urged the investor to obviously consider the choices of that, because the idea here is to create, for us at the very least, is to create diversification, to dampen the impact of public market volatility. Yes, comfort is obviously key, and yes, the investors do make the final decision at the end of the day, but we try very hard here to help these investors create a portfolio for themselves that they had described to us in the very beginning as what they're trying to achieve for their investment objectives. Yeah.
Cool. So Nash, over to you. Would love for you to unpack for our viewers, what other considerations do you take into consideration when advising a accredited investor on a suitable direct private placement?
Sure. So a simple one is, what age are they and what are they trying to achieve out of their portfolio? And to use a specific example, we launched an offering that was a venture stage business with a medical device company that it's got some very compelling elements to the problems that it's trying to address in the healthcare space. And a member of our network who is a retiree wanted to make an investment in this company, and we just wanted to make sure he understood that this is a venture stage investment. This is a 5 to 10 year investment at the minimum, and that's got to be reckoned with at a base level. So it's really, who am I and where am I in my investment journey as well.
Fantastic. Garrick, bringing you back into the conversation. Tax, it's a hot button, I'm sure. So how does their tax status factor into these sorts of considerations around direct private placements?
Tax status absolutely does play a role here, but I'm going to preface that by saying that myself and no one in our firm are tax professionals or CPAs, and none of what I'm about to mention is tax advice in any way, right? Okay, so with that said, and with that disclosure out of the way, absolutely yes, the tax status does play a role. And a great example of that would be if an investor came to us mentioning that they're hypersensitive towards income producing investments because they recently sold a business for a large lump sum in that given year, and they're going to have a large or massive tax burden as a result of it. And they tell us that they want to shy away from any current pay or income producing investments because it would just be more taxes they'd have to owe on that. We make it a point to mark very diligent notes in our client resource management system to show investors offerings that are not current pay or income generating, right? And so additionally, if you think of tax status within the realm of what that would look like for an investment, a lot of times investors will think of tax equivalent yield, right? Such as municipal bonds, things like that, where your tax rate is offset by that return because you're not going to owe federal or state income taxes, right? And so I also want to say that Carofin, we've never launched a security that's federal and state tax free, but Carofin has many times underwritten offerings that do or that are accompanied with various tax credits, solar panel projects, EV charging stations, for example, opportunity zone investing, and so for those individuals there, depending on the overall investment in general of how that lines up with their objectives, we will most certainly factor those things in to creating particular recommendations for those investors. Yeah.
And then something that a lot of folks aren't aware of is that you can make an investment in direct private placements through a self-directed IRA account, which is something that I do personally. There's a growing number of custodians and administrators that provide an account where you can invest into a Roth, or you can allocate capital into a Roth, where you can then allocate into direct private investments in a tax-advantaged account. So it's something to keep in mind, and we have plenty of resources that can direct people to the right places to figure out if that's a suitable option for them.
Cool. So you walk with them every step of the way.
That's correct.
Fantastic. Garrick, just to want to double click on something you touched on around the portfolio of the investor. What other considerations like objectives or maybe liquidity or industry concentration, how do those sorts of things factor in your recommendation to a accredited investor on what type of investment to make?
We always make it a point to ask any new or existing investor on an ongoing basis for not only do we ask in terms of, any particular sectors that you like to see, any particular types of investment structures you prefer, like income or growth, kind of thing. But we also will ask them if there are particular verticals that they do not want to see, anything that is going against what they their own particular personal mantra towards investments. And a great example of that would be many investors these past few years getting into the ESG types of investments and impact investing as sort of a thematic approach to how they want to allocate their overall portfolio. And so if we are signing a defense contractor or whatever it may be to something like that, it may coincide with what they're trying to achieve based on their bias for that, sort of given thematic deployment, system that they've got in place. And so, yes, that's certainly one of them. Yeah, it's a huge thing for us to make sure that I'm showing you the investments that you want to see and that align with your sort of core objectives.
Yeah. And again, getting back to personal considerations of investors, some of the individuals that we work with, they have a specific domain expertise and they want to continue to see investment opportunities that are within that given industry. So they might have made the personal wealth in agriculture which is a sector that we work in a lot, and they'd like to see more agriculture transactions to participate in through Carofin. On the flip side, some individuals, they might have made their capital, they might have made their wealth in manufacturing or another industry, and they're trying to diversify capital outside of that industry. So getting back to Garrick's point, we spend all day thinking about investment criteria for the given individuals and then family offices and institutions that we work with, so that we're bringing highly relevant deal flow to someone that's making an investment decision.
Fantastic. Garrick, thank you so much for being on the show. Nash, thank you as well.
Yeah.
It's been really insightful. Key takeaway here for me is you guys really do walk hand in hand with your investment partners and your clients, and to help them make sure that they make the right decisions based on their personal objectives and their kind of key intended outcomes.
That's right.
Thank you, gentlemen. Thank you, everybody, for tuning in. We'll see you in the next episode.